Hey, what's up, y'all? Jed Barker here with Best Life Mortgage. One of my real estate partners has a new listing that just came out recently, a beautiful home. And I looked at that online. I thought, that would be a great house to do a video on to talk about what income would someone need to make to potentially qualify to purchase that if they wanted to qualify on a loan instead of buying it for cash. And as we know, most people do get home loans to purchase a home. So that's the question we're going to answer today is what income is needed typically to qualify for this certain home amount of a loan. And also, let's look at the payment. Like, what would the payment look like? What's the best product? But let's take a look at this new listing first. This is a brand new listing over here in Simpsonville. I'm going to go ahead and make this little picture of me small, put it down here in the corner. But look how beautiful that home is. Brick, I think, all the way around. A beautiful fireplace in the front. Looks to me, I can't tell for sure, but it sort of looks like a Meritage home. The way that it's set up. So it could be built by Meritage. The finishes inside definitely look like a Meritage sort of style. They got the wainscoting all the way up. So just a beautiful house all the way around. Nice in bookshelves built in, good coloring, awesome flooring all throughout. So just look at a really pretty house, great new yard, everything like that. Its listed price is $650,000. It's a pretty big house. It doesn't say the square foot on here. I would imagine somewhere around 4,000 plus square feet. If I was to take a guess, probably 4,500, maybe even 5,000 or more. I'm not sure, but it does look like a 5-bedroom, 4-bath house. Asking price is $650 for that house. It's active right now in the MLS system here in Greenville. And so take a look at that, built in 2017. So question is, if you're seeing this online and you're like, do I make enough income to qualify for this? And if I do, what's the best loan to get if I need to get a loan? So let's take a look at that. Before we do that, let me just mention my partner, John Murphy. If I'm looking here on his Zillow profile, one thing that stands out to me right away on John is take a look at this: 115 reviews, 5-star rating on Zillow. Go take a look at other real estate agents, how many reviews they have. That's an exceptional number, and I know it is that number because John's on the ball. He knows what he's doing. He's a super good, awesome real estate agent. I've known him now for multiple years, probably 3 years or more. We've done quite a bit of business together. I'm a lender. Obviously, he's a real estate agent, but he knows what he's talking about. He's an excellent, excellent option for listing your home here. He gets them sold very well, very communicative, but he's also awesome for your purchasing a home. So anyway, props out to John for listing this beautiful property. You can contact him. He's with Bluefield Realty Group. So take a look at that. So let's go ahead and take a look at the question. If I want to buy this home at $650,000, what would I need to earn in income to qualify for this house? So sort of not a loaded question, but it's sort of a question is like, it depends, right? So I'm going to take a look first from a perspective of we're doing a conventional loan at 5% down, because 5% down would be your minimum down payment on this loan type if you're going to go ahead and buy this house. Unless it's your first-time homeowner, but most first-time homeowners won't be buying this much of a home. So let's consider 5% as your minimum down payment. So if you made $113,000 a year in qualified income and the interest rate was at 6.75, you did a 30-year loan, and you did that 5% down payment of $32,500. If you had no other debts at all, so your other debts are zero, your property taxes were $3,800, and your homeowner's insurance came out to $1,450, and you were allowed to go up to sort of the maximum 49% debt to income ratio with a mortgage insurance payment, you would be able to purchase that home up to $654,000. The monthly payment on that home, if you were to purchase with that type of loan, would be $4,592 a month. That includes everything: principal, interest, taxes, insurance, mortgage insurance. So keep that in mind, $4,592. Now, a lot of people have monthly debts or monthly obligations, so they can't necessarily qualify just with zero. I'd say averagely a lot of people have about $1,000, maybe more in payments. I'm going to put it at $1,200 in other payments. That could be student loans, auto loans, credit card payments, stuff like that. And so if we throw $1,200 a month in other obligations, you'll see we drop down to only being able to qualify for a home of $474,974 on that income. And so that actually took a lot of purchasing power away from us for those. And that's a little bit of a lesson there is how much other debts do reduce our purchasing power on home financing. So let's take this up to $125,000 in income now, and you'll see we're up to $548,000. So we actually have to keep on climbing. Oh, even over 140. Let's try $140,000 in income. Okay, now we're up to that level where we're back up to that 640-ish, 650-ish. So this home again is worth how much, or what's it going for? 650. So we're not even actually quite there yet. It looks like we have to make about 150K a year Uh, that's at 700. So you'll see here that that debt actually plays a big role into how much you can qualify for. But at $150,000 a year of income with $1,200 of debt, 5% down, now we do qualify for that home again on a conventional loan, and that payment obviously stays the same. Now, what does that payment drop to if we put down? Well, actually, I won't get into that in that video. I'll look at that in another video. Um, but if we have zero debt, we're only having to make, like I said, about 100 and it was a lot less, right? Like 117,000. Let's drop that back down real quick so you can see it. Zero debt, 117,000. Yeah. Man, that really dropped it. 117,000. We still qualify for that with zero debt, but as soon as you add in that $1,200, you're dropping it down. You need to make about 150. So that's super good to know. So that monthly payment drops down. Well, it is that monthly payment goes down at a $500,000 house to 3,555, but that's besides the point. I hope that's sort of helpful for you to realize a couple things. If you want to purchase this home at $650,000 and you have no debt at all, you're just putting 5% down, you can actually have an income of about $117,000 and you can qualify for that potentially. If you have about $1,200 worth of debt, you're going to have the income of about $150,000 to qualify for that same loan. This is on a conventional mortgage with 5% down. You might be asking yourself, what's a conventional mortgage? A conventional mortgage is something within conforming guidelines. It did a little Google search just to show you if the purchase loan amount you need is under $726,200. So if it's less than that, then that will fall under conventional guidelines for conforming loan limits. So that's any loan you need to get under 726,000 will be a conventional loan if that's what you'd like to go after. If it goes above 26, that goes into a jumbo loan. Okay, so keep in mind that. I hope that's been super helpful for you. That's a great listing that we got into there. John Murphy, the realtor with Bluefield Realty Group, is going ahead and listing that property. Now you know the numbers for what you would need to earn to qualify for that. And one potential loan product to qualify for that would be a conventional loan. 5% down payment would be your minimum. You could go up as high as you want on that down payment to reduce the amount of income needed. So my name is Jed Barker. I'm with Best Life Mortgage. You can contact me at 864-800-9251. Like to run numbers or anything like that, I'm more than happy to do that. We'll talk to you soon. Have a great day.